guys ever put your head to the pillow thinking, you know what, I'm gonna go to sleep now. I'm tired, I'm just gonna sleep here. Is that okay? And then you are trying to go to sleep, but in the process of trying to go to sleep, you wind up staying awake. It's essentially what I just did, except I did it like from 10 p.m. all the way through till about 5 a.m. It's currently 7 a.m. at the moment. Yeah. Am I right? I bugging me. This is what we got going on right now. As you can see, yesterday was the end of a retrace. We're moving back up. On the daily, we have a. Well, I was gonna say we have a thing inverse. We have a fair value gap, but I'm wrong. It's the inverse fair value gap right here because this candle closed below this one. It's not a break of structure. It's just an inverse fair value gap. Well, it's kind of obvious what price wants to do based off of this action at the moment. Wants to go higher because we have a fair value gap right here. However, we need to understand something. I need to understand something. Every time we identify one of these, we got to be very careful that what we have going on earlier isn't something else. We had a fair value gap right here. Realistically speaking, let's back up all the way, shall we? We had a break of structure out of a downtrend. We technically called it yesterday when we chose to sleep through, right? Trading. We had relatively equal highs, and it was withdrawn liquidity. Price came up, swept this, which is. This says we're in a downtrend, but due to now a break of structure out of this downtrend, something tells me price wants to continue higher. We have a fair value gap that's also saying price wants to continue higher on this time frame specifically. This is the hourly. This is the hourly time frame. Just so we're on the same page. Okay. This says it wants to continue higher. Asian, London, New York Stock Exchange. We're going to sit here, wait, let's check news, see what's going on. Can y'all see that? You cannot. Let's do this here. There we go. So as you guys can see, we have at 8:30, we have these two orange folders popping for USD. At 10, we have CB Consumer Confidence. Nothing serious. It's not until 10:10 that we have FOMC member WAR speaks. Technically, that folder specifically is the one folder that would break the camel's back. Big bad no. Don't even try trading. It's not worth it. Right? Tomorrow we definitely cannot trade because it's a red folder. Today though, I'm gonna try. I know it's a bad idea. I'm gonna try to. We've traded orange FOMC folders before, and they seem to work out sometimes. Sometimes they haven't. We're gonna see. Thursday seems like it's gonna be a bad day to trade just because we have two red folders and two orange folders. Friday is our last one, except this core PCE price index is a little concerning, just a little bit. So. We'll see what happens. We'll see what happens. I'm just gonna go ahead and disable that. Boom. Right now, what do I think price is gonna do? I don't know, because we have relative volume on both sides, like almost equidistance. That's the most recent high outside of this current gist, and that's the most recent low. Other than this one right here that we can really look at. Down, up, low, good. From this high this way, we have a fair value gap right here. gap we are currently within. So that's what we're looking at. That's what we're on at the moment. Of course, we have our key levels here. Let's go and actually change these colors very quick. These are take profit zones. Now let's do green today, shall we? Green looks good. Yeah, we have green lines on the chart now. I want to get a second one. Sure, let's do that. The next lowest low is that one right there. That's currently what I'm looking at for price action. That low, this low, this low, up. That would be our mode of getting liquidity on each one of those. And then aside from that, we have this fair value gap to clear if we want to break structure out of this current downtrend that we're in. Again, this was the retrace off a larger time frame. Technically, this is the leg up, moving back into an uptrend. And we are still in an uptrend on the daily, right? We have not broke structure out of this uptrend. We have up, down, up. This was breaker block, fail retrace, continue higher, leg down, stop, no close below, continue higher. Higher time frame says we're going to go higher. There's nothing saying we're not going higher. Everything's saying we are going higher. For this right here, sure, you can argue that this is downtrend. However, we broke past this high here. We're broke past that high there. The next high, the next available high outside of that is way over in the higher time frame. And I'm more than confident, I am more than confident that because of all the confluences through this, that we might actually be able to get up past this high here. And I'm sure there are highs throughout this like little bit of space here, right? That we could claim before or after we hit this take profit specifically. I'm primarily after the most recent highs and lows within this. And this is over the span of several days, like the past 2 weeks of price action. So, taking my grain of salt as I see it. Don't want to get greedy. Looking at the hourly specifically, we had an inverse fair gap that said price is going to go higher, which is cool. It did go higher. That's good. You can drop that. From Asian session forward, we had a down fair value gap right there on the fourth red candle. Here, I got you. This candle right here left us a fair value gap, which was cool. It was cool. Price continued lower, hit a low, then it broke out, continued higher. We had inverse fair value gap here, boom. Break of structure there, boom. Continue higher. Fair value gap that formed, boom. Fair value gap signs of continuation. Price is going to continue higher, boom, up to there. Since then, we've been on a retrace. We broke structure again, back into a down move. Again, we have news at 8:30. We broke structure after the fair value gap. Said we were going to continue higher. So now we have two modes to look at. We have two things to look at. We have fair value gap 1 here on a low time frame. Then we have fair value gap 2 here on a higher time frame. If we respect this fair value gap on the low time frame, I'm convinced we will see a move up, break past this point, and continue higher. I think. I'm convinced. If this one's respected. If it's disrespected, we get a closure below it. 1, we have an inverse fair value gap, and 2, break of structure. From that, we know price is actually going to continue down instead. For it to continue on downward, we'd be looking for it to hit this key level here, come back up with an equilibrium, create every sign of confluence needed in order for us to take a trade before 10:30, and from there we'll have an accurate trade. The only issue at the moment is going to be the FOMC folder, as well as the other 3 orange folders within 10:30. Because remember, we have 2 hitting at 8:30, we have 1 hitting at 10, and we have another, the FOMC, hitting at 10:10, which is going to influence the market in an unpredictable manner. They're high impact. We're not supposed to be trading on FOMC. I'm not supposed to be trading on FOMC. We have until 10:30 to find a trade. And if by 10:30 we cannot find a trade, we're staying out of the market. We need to pay very close attention. I need to pay very close attention to every single confluence that presents itself, and I need to know how to identify them accurately. Relative equal lows, order block, sweep, push higher. From that push, we had boom. This is not a breaker block. The highs are not equally aligned. I want to call this a breaker block, but I think I'm wrong. Breaker blocks are signs of continuation through a failed retrace. A respected breaker block says price does not have a wick in an uptrend specifically. It does not have a wick above it. There is no wick above it at the moment. We're looking for breaker blocks to get disrespected in order to continue in the direction they're going in. I'm going to keep referring to this until I get breaker blocks down. I think I'm messed up by taking this note specifically because it says first identify an order block, then move backward to identify a breaker block. But the problem is, if in the time an order block forms, right, I move back to find a breaker block instead, I will have then messed myself up because a liquidity sweep will literally happen, because that's what an order block is supposed to be doing. It's the indication that a liquidity sweep is about to happen, and we want to catch that liquidity sweep. So I think I messed myself up by writing this note specifically. How to identify breaker blocks specifically? They're the move down or up. They're move up or down prior to the break of structure towards the reverse in trend shift. Break of structure before the break of structure in trend shift. General trend is up outside of this here, right? Because remember, we broke structure up to this. This made us into an uptrend from this downtrend here. So breaker block, break of structure. What's the sign price is continuing the other way? Continuation up, right? These are not to be confused with order blocks. They are at the leg down before the break of structure / liquidity sweep caused by order blocks. Both breaker blocks and order blocks are typically found within the same price range. So what I'm looking for is within this price range specifically. Yes, I know there are many rectangles on the screen. Within this price range specifically, there's going to be a sweep past this high. Because remember, breaker blocks are signs that price is continuing higher. Okay? This could be an order block that we're watching form right now, actually. Per this note specifically, with the exception of going backwards to identify the breaker block, it says the order block can be price that broke structure, and the breaker block will be the retrace from just before the move, which will cause the liquidity sweep. So, for this right here to occur, breaker block, right? I think I messed up when I said it the first time, because it's within the same price range, and breaker blocks are to be treated like fair value gaps, with the exception of you have to include the wicks as well. In a breaker block, for an uptrend to continue, price cannot go above the wicks range. And within the same price range, we want price to come down, sweep the most recent low, and from that cause the liquidity sweep. That liquidity sweep is going to be a large candle up and a closure above the breaker block, signaling that yes, this was breaker block, this was an order block, and due to this order block being present and not disrespecting the breaker block, we'll see a liquidity sweep, a big move up. And typically, my understanding is, if we see that and this is a well-defined order block, we'll see a leg up so stark that it will leave a gap, a fair value gap, sign of continuation, and from that, price continues higher, which works, in my opinion. It makes sense. I see 7:25. We're not allowed to take trades until between 8 and 9. We have literally an hour before news, high impact news comes out. I am intrigued to see what that's going to do, because in between these two, we're going to see price move a whole lot, and it's legitimately the next candle that we're looking at. So with that being the case, I'm going to pause the video now because I think I've identified every single confluence I can up until the point, and I'd like to know and see for myself if I'm correct about this move specifically. With that being the case, I will be right back. Okay. So, this is where we are with market. It's now 8 a.m. I'm looking at live price action. Market just opened for New York Stock Exchange. We did not break structure. I want to point that out. We did not break structure at all within this. The breaker block was respected. We had price come below most recent low just before the breaker block. Other than that, it was respected. We did not have a break of structure. This fair value gap is being respected. We should see price continue higher. We should. I'm gonna pause the video until we see a new confluence that I can confidently identify, and or when news hits, so we can further confidently identify when price is going to do a thing. On the lower time frame, it says this has not been respected. This fair value gap has, or this breaker block has not been respected. Each one of these candles represents 30 minutes. Each one of these candles represent an hour. This was our breaker block here. That is a valid breaker block right there. That's our price range. Within this price range, what did we see? We saw this boom, sweep of this. So I think breaker block, order block, sweep of liquidity, right? That's our sign of reversal, sign of continuation. Price is going to go higher. We also got, well, we can't count that right there as a inverse fair value gap because we had price go all over this. But we have a fair value gap here on a 30-minute, and the breaker block was on this time frame, not disrespected. It may have been disrespected. Let's see what price does here. If it's respected, then the notes are accurate. Just before the move will cause the liquidity sweep. From this sweep, everything else, we have fair value gap here. Did this fair value gap do anything? Did it fill the breaker block? It filled it. So it's just like, it is just like a fair value gap. The breaker block was filled via liquidity sweep. So this is a valid gist. Respected. It filled right up to it. Price swept the low before, from just before it. Because it swept, liquidity sweeps are signs of reversal that price is going to go higher. If we get a sweep on the lows in an uptrend, it's going to continue higher. That makes the most sense to me. What we're looking for now is a defined break of structure out of this move. Though we have a continuous uptrend and the lows have not been broke past, we're looking specifically now for price to jump up above this high here, to hit this key level and to close above it. We're looking for price to come up above this breaker block here, disrespect, and close above it for a sign of continuation. We can no longer count this fair value gap. We cannot count this because it filled the breaker block here, and it's within the price range. Because of this, we want to see price up and close for continuation. That's what we want to see. This would have been a break of structure. We would have seen it. This order block would have either caused a break of structure or a liquidity sweep. We did not get the break of structure. Break of structure in an uptrend is when a low is closed below. Down, up, low. Down, up, low. But this closure is not below this low here specifically. So, in respect to the breaker block, it's been respected. One. And two, we did not get a break of structure. Instead, we got a sweep of this liquidity here. Because it was swept, price should continue higher. It should. By the definition of a breaker block being filled, it should continue higher. Again, though, we're looking for key level to get hit. That's either 1 or 2, primarily, that we're looking for. It's 8 o'clock. Price has... Oh, price has. The market has opened up for us to actually take a trade with, but we're going to wait patiently for our key level to get hit. We have a fair value gap that I am willing to treat as a key level on the hourly. This right here, this fair value gap is a key level from this white line down to this one specifically.